Let's be honest, the word taxes, it can feel a little confusing, maybe even a bit intimidating, right? But what if I told you it doesn't have to be? In the next few minutes, we're going to pull back the curtain on the Indian tax system so you can really understand where your money goes and why. So, here's our game plan. We'll start with the big picture. Why do we even have taxes? Then we'll break down the two main types, direct and indirect. After that, we'll peek inside the official rulebook, walk through how your tax is actually calculated, and finally, figure out how all your income gets sorted. Sound good? Let's jump in. Okay, first things first. Let's tackle the most basic question of all. Why? Why do taxes even exist in the first place? I think this quote just nails it. The simplest way to think about taxes is as your contribution, kind of like a subscription fee for being part of a functioning society. It's not just cash vanishing. It's what we all chip in to build the world we live in. And this isn't just a philosophical idea. It's actually baked right into the Constitution of India. It gives the government the formal power to collect this revenue, all for one main purpose, public welfare. So what does that public welfare really mean? Where's the money going? Well, it's paying for pretty much everything that keeps the country running. We're talking about national defense, schools for our kids, hospitals, and all the infrastructure we rely on every single day, like roads and dams. Okay, so we've got the why down, but the how is where things get interesting. You see, not all taxes are collected in the same way. There's a major fork in the road splitting them into two big categories, direct and indirect. This really breaks it down perfectly. A direct tax is exactly what it sounds like. It's a tax on your income and you pay it directly to the government. You can't pass that burden on to anyone else. But an indirect tax, that's a bit different. It's levied on goods and services. So while the business pays the tax, they just build it into the price, meaning you, the consumer, end up footing the bill. And you've definitely seen both of these in action. For direct tax, the big one is income tax, and that's what we're going to focus on. For indirect tax, just think about the GST that's on almost every receipt, or the customs duty on imported goods. All right, let's zoom in on income tax. Now, you might think it's just one single law, but it's actually more like a whole library, a collection of rules and documents that all work together. The best way to think about this is like a complex board game. The Income Tax Act of 1961, that's your main rulebook. The Annual Finance Act is like the yearly update that changes some of the rules. The income tax rules, that's the detailed instruction manual. And all those circulars and legal cases, well, those are like official clarifications from the game designers when players get confused. But at the absolute center of it all is the Income Tax Act of 1961. This thing is the backbone of the entire system. It's a huge document, 298 sections, and it's been the foundation of our tax law since way back in 1962. Okay, enough with the theory. Let's get practical. How do you actually get from what you earn to that final tax figure? Let's map out the entire journey. This is really the million-dollar question, isn't it? How does the government take all your earnings and figure out the exact amount you need to pay tax on? Let's break down that process. Now, this might look a little complicated, but it's really just a 5-step funnel. First, they figure out your residential status. Next, and this is key, you have to sort every rupee you earned into one of 5 specific buckets. Then you do the math for each of those buckets, taking out any exemptions. After that, you bundle some incomes together and subtract any losses. And finally, after a few more deductions, you get your total income. See? It just narrows it down step by step. Let's really dig into that crucial second step, classifying your earnings. The law has this very neat system where every single possible way you can earn money has to fit into one of 5 official categories, or heads of income. And here they are, the 5 big buckets. First, your salary. Simple enough. Second, any income you get from property you own. Third, any profits from a business or your profession. Fourth is capital gains. That's money you make from selling things like stocks or real estate. And number 5 is the catch-all, income from other sources. It's for anything and everything that doesn't fit in the first 4. And the whole idea here is that this system is totally comprehensive. It's designed to cover every single type of income you could possibly receive. There are no gaps. By design, nothing is supposed to slip through the cracks. And there you have it, a lightning tour of the Indian tax framework. We've gone from the big why all the way down to the nitty-gritty how. So I'll just leave you with this one thought. The next time you look at your payslip, now that you know the basic structure behind it all, does it make a little more sense?